Sunday, y'all. Hope everyone's having a great weekend. Welcome to all new members of the Telegram. I really appreciate you guys joining and hope you find value in some of the setups that I'm putting up here. You'll notice that I switched things around in the Telegram a little bit just to keep things organized. We have pending, active trades, and a separate videos section. It's been a few days I've put up a video, so I figured I'd do one today. It's going to be one part education, one part actual setup that I'm hunting. We're going to go over a couple nuances that not many people talk about within trading, and I think it's important to know, so I'll just go through them right now. So we're looking at Magic, and you'll notice I have the Binance spot chart on. Every chart is going to be slightly different. Obviously, every exchange has different market makers. Sometimes they have shared market making, but for the most part, every exchange is going to have their own independent market makers, and you're going to get slight differences in the data in terms of the wicks and the final close prices of each candle, and just some of the sketchy market maker behaviors you're used to seeing. So the most important part when I'm trying to chart is know the data range that you're looking at. So again, a Binance listing doesn't suggest that the coin was listed here. This isn't the token generation event on December 12, 2022. Because if you go back into the charts and I look up here OKX, you'll notice this chart. Okay, I'm on the weekly. Oh yeah, it was on the weekly as well. So remember, December 12, 2022. This one is February 14, 2022. So every chart is going to be slightly different. But again, this is almost a 10-month variance, right? So you don't have all this data that preceded this exchange listing candle, right? So just keep that in mind when you're charting, because sometimes you'll chart the data and something is off, and you could lose your trade just by not having accurate data. For instance, on this one, if I mark this in, I'm looking at the exchange listing here, right? But that's the Binance listing day, right? So again, that's marking in 38.21. But if I go into OKX, you'll see here, this low is 21.12. So huge variance, which is going to skew the data that you're looking at for your charts when you're trying to get in a trade. So just pay attention to that. So we'll look at Binance. I'm just using this for the raw charting, and then we'll go into the final setup that I'm looking at eventually. So the main thing I'm looking at here is based on the Binance data, these lows got taken out on the weekly. So if we look at the weekly chart, this is what I'm seeing. Weekly external taken out. This is your weekly draw based on the weekly dealing range from high to low. So this would be in D premium, and after taking out the lows, it's the only visible. I mean, you have one right here too, but that's right at equilibrium. It might just go there because you could see a pivot, but this would be the extreme draw. Regardless, the draw is up. So on the weekly, I'm looking at up. On the daily, we have a different dealing range. We have from this high that rebalanced this zone into this low. So within that daily dealing range, there's two imbalances right here. The second one, the highest one, was less significant, but you could see when this one got taken out, they also rebalanced that one. So when momentum is strong, typically they'll just drive up to the deepest one in premium, or the deepest discount one on the way down. So going on the daily schematic, you have daily imbalance, so daily internal into daily external, which would be these two lows. So my daily draw is conflicting with the weekly, meaning I want to wait for the daily to catch up and be aligned with the weekly before I enter a trade. So I'm going to be very patient with this one. Now you have equal lows, so this represents a really strong draw, and you could even push it to here, suggesting that all this is going to be part of the same liquidity pool, and then you have this one right here. So I always look at from the first wick to that one, it's only 1%. To this one, it's 6, and to that one is 11. So this low, less likely to get to that one. very likely these two get taken out if we get a pull back, and quite possibly if there's liquidations here or people start joining trend, it'll grab these lows as well. The other thing to note, it's now pushed up into this imbalance. So if the momentum to the downside is strong, then I would expect it to start reversing and then taking out some liquidity pools on the daily. So that's going to be your daily, and then the 4 hour. So we have a different dealing range in the 4 hour. We have basically from the low here that took out that low, and the high here that took out these highs and rebalanced here. So this is going to be our 4 hour dealing range. Within that, again, you have equal lows. They're not the same like the daily equal lows, which are going to be lower, but it's more or less the same idea that I'm watching. So within that dealing range, we've now drew into discount. I don't think the move is done. If anything, what I'm seeing here is these highs got taken out with that wick. So that was a continuation purge until the final draw is met, which is down here. This subtle retracement right here went into this 4 hour imbalance. So once this is rebalanced completely, you might get one more like low time frame continuation purge in the range. And then I would expect it to draw into these equal lows on the 4 hour. So now if you zoom out, we're looking at all time frames. Where is the next draw? So weekly is the highest time frame, so we're less concerned with that. We just want to be aware that there is a draw on the highest time frame up, but our intraday and daily is still suggesting more downside. So I wouldn't be trying to FOMO in just yet. I'd rather see some of this liquidity get taken out. Doesn't have to be all of it, but I would suggest being patient with this one. Now, what I'm seeing next is if we're in a strong move down, so let's say we go into the daily and the 4 hour draw down here, what we might get is some form of a manipulation where it takes this entire liquidity arc. So a lot of people look at demand lines like strong support, and they are until they aren't, right? So the idea is every tap of that demand line is creating additional liquidity for market makers to zap out when it's time. And if the location of each liquidity pool is within a certain percentile, they're more likely to get taken out. Like this one was 1% and this one was 6%. So the first one is more than likely to get taken out with the equal lows. This one less likely, especially because that wick took out these. So I'm not 100% sure, like no one is, but like I'm not that confident that it's gonna go for these two lows. It's probably not likely. But if there is some kind of liquidation cascade, then I would expect a push down to do a manipulation. If that's the case, then you have an accumulation zone that looks a little cleaner on the line chart. Manipulate down to here to blow everyone out of the trade, and then I would expect a distribution into the highs right here. So that's going to be your original consolidation. And what I like about this idea, if there is a blowout, is that there's a ton of swing failures to target on the way up. So here's a huge liquidity pool. This one's relatively close to that one. Equal highs on intraday and even on the daily. And then down here, you have the same thing you have here. So basically, you have a lot of fuel to push this up when it's ready to distribute higher. So that is the less likely scenario. And my main idea that I'm working with is based on current price action. So if you look in the range, I like to go into line chart just to really identify structure, and you'll see how clear it is here. So between these two, you have a pivot. I'm just marking in this based on where all the candles were getting wicks, right? So pretty strong resistance there. But you can see it clearly on this pivot it tapped here and held it as support. Here it was resistance, here resistance, and now it looks like it's holding, right? So based on the line chart structure, as long as this holds, it looks good to me. Now, if we jump into the KuCoin chart, which has more data, what other reasons do you have to go long? Well, the first thing is the deepest and most obvious weekly imbalance got completely rebalanced with that last leg. Below that, again, this is on OKX, but below that, this low took out that low. So this technically should be a protected low, right? Because that was a high resistance liquidity run to send it higher. So I believe this entire range, the drawn liquidity has been met. Now, if you add volume to it, what I'm doing is adding composite volume from the beginning of the data to where we are presently. And at the bottom, you'll see there's this blue bar. That's your value area low. So there's a value range, and within the value range, this is your extreme low, which it's using usually as pivots, right? So you can see here it pivoted very strong and then ran. And right now we based off it again. Just above it, you have a high volume node. So if I hide the chart, right here, you could see a big spike in volume traded, right? The rule with volume trading is you're going to chop when you're inside the high volume node. But once you've confirmed above, so once you start closing a few candles above the high volume node, your buys should be up. So if we've satisfied the drawn liquidity to the downside, and now you have all this fuel to move the price up, once you start closing candles and using that high volume node as support, as long as we're closing above here, your buys should be to only go long. So in this case, I'm watching this high volume node on the OKX chart. I'm watching this drawn liquidity and this one have been met. So now my new draws are going to be much higher based on the daily, based on the weekly that we identified way up here, which is that weekly imbalance. It can go higher, but at the same time, you're not trying to be greedy as a trader. You're just looking for the most obvious draw with the path of least resistance, which I believe is going to be up there. So plan A is going to be very simple. As long as we keep closing above structure and above this high volume node, the downside liquidity has been taken and that the draw has been met. I'm looking now for only longs. And even if there is one last capitulation in the range, taking out the demand line liquidity and the daily equal lows, the 4-hour lows as well, right here, even if those get taken out, then I'm just simply looking for the accumulation, manipulation, distribution idea. So those are basically two setups in one. If it respects structure, we go long. If it disrespects it, we close our long and we wait for deeper pullback into the manipulation zone to go long. So this was a little bit different. Hopefully you guys got some value out of the video. I'm going to keep posting these during the week, and have a blessed trading week, guys. Cheers.